As UK Prime Minister David Cameron makes his way around the European capitals, market watchers back home are slightly disappointed in the slightly lower figure in the second UK GDP growth rate estimate for the first quarter. So what to make of all of this? I'm joined by market analyst with CMC Markets, Jasper Lawler, to find out. Jasper, we've seen the second GDP growth rate estimate for the first quarter out at 0.3% this morning, slightly lower than expected, and the pound also fell with the result. A knee-jerk reaction? What could we see in terms of pound trading?
Well, yes, I think the hope going into this report was that actually we'd see the higher revision to 0.4%, which is still a slowdown from the fourth quarter of last year, but still not as much of a slowdown. And so it was a surprise just to see some of the components that we thought might be stronger, namely the sort of disbalance between imports and exports, and the sort of slowdown in the service sector, which is obviously very important to the UK economy, was just a bit surprising, and not so surprising on the release of the data to see the pound move lower, particularly given the fact that it has been falling off since reaching a peak of around 158 a couple of weeks ago, and that's a large part of that when you're looking against the US dollar is the strength of the dollar. We're seeing that reflected in the euro, even the price of oil. So I think until we can see more confirmation that the UK economy is improving in the second quarter, probably the path of least resistance for the pound is lower at the moment.
Should we be less focused on what to expect in the first quarter and instead look towards potential headwinds further down the road?
Well, yes, I suppose I'm saying the same thing again, but it's that it's the outlook for Q2, which is of some importance. But also, we had the Queen's speech yesterday, and so it looks like a bill is going to be signed on the in-out EU referendum. And so that potentially is a bit of a headwind for the pound and even UK stocks. There's a certain degree of uncertainty that comes along with not knowing whether Britain's going to be part of the EU. And so my feeling is that actually businesses are not going to consider it a major factor when deciding on their investment decisions in the next year or so. But I think in terms of markets, it's an extra headwind, particularly given the strength of the dollar.
And as you've touched on, today David Cameron is shaking as many hands as he can with his 2-day tour of European capitals as he sells his plan to reform Britain's relationship with the EU. So what can we expect from these talks?
Well, hopefully there is a few areas in which Cameron can find some agreement between these different nations and just find some kind of partners, if you like, that can stand behind him and agree to a bit of reform, and maybe over the course of the next couple of years, before the 2017 deadline, he can actually get something together and make some real changes. I'm skeptical that he'll be able to, just because I think there is the motion is already in place in the Eurozone that it's moving towards some sort of super state. And I think most nations sort of are accepting of that, and probably the Cameron and the rest of the UK we're really kidding ourselves if we think that we can change that. I may prove to be wrong on that front, but to me it's a tall ask from Cameron. I think maybe he can get a few changes, but probably the net result of the vote people will just vote for the status quo anyway. So maybe his these talks that he's having aren't going to be that actually impactful towards the vote, but they could be impactful on the UK economy if if actually some of these reforms mean less red tape from Brussels.
That's all from Jasper and myself for now. Thanks for tuning in, and be sure to click back. Bye for now.